Okay, so we're going to look at these. These videos are put together by the Department of Labor to tell, and they're designed for employers, to give employers information about the Fair Labor Standards Act and the different factors of the Fair Labor Standards Act, the different components of it. The first one is coverage. Who is covered by the FLSA? Okay, so we'll start with that one.
Or to some of your employees.
All right.
The Fair Labor Standards Act applies to most businesses and employees, but not to all. If the law applies to your business or to some of your employees, then you are an employer covered by the FLSA. Your business can be covered by this law in three ways. The first and broadest application is called enterprise coverage. You fall under that umbrella if your business takes in at least $500,000 a year in gross sales or total business, and you have at least 2 employees who handle goods that are moved in interstate commerce. As long as you have 2 employees, the second requirement is essentially always met because it includes use of anything that was made out of state. For example, pens, paper, cleaning supplies, phones, computers, or any other equipment. And that does not all have to happen in one establishment. You can have multiple establishments, individual related businesses, or even multiple corporations, and the activities of all of them may be looked at together to determine if coverage applies. For example, meet Sam. She owns and operates 3 locations of a fast food franchise. If these locations perform related activities under common control and with a common business purpose, the Department of Labor would consider all of these locations to be one enterprise and look at all of them as one business to determine if Sam has reached the $500,000 threshold for FLSA coverage. This would be the case even if Sam set up the businesses under separate legal names or even with separate tax ID numbers. Since Sam runs 3 separate locations of the same brand of fast food restaurant, it's one enterprise. In this example, if Sam's 3 locations each gross $200,000 a year, that adds up to $600,000, so she's reached the threshold. Her business and employees are covered. The law applies to every worker at all of Sam's locations, unless an exception specific to certain employees applies. If enterprise coverage applies, everyone who works for your business is subject to the requirements of the FLSA. There are special exclusions that apply to some types of workers, but most employees who work for most covered enterprises have to be paid minimum wage and overtime, as the FLSA requires. The second type of coverage is called individual coverage, which applies when some of an employee's job duties involve her in interstate commerce, meaning business or work that crosses state lines. This can apply even if the employee doesn't work for an employer like Sam, that is a covered enterprise. Individual coverage can be based on tasks as simple as making phone calls across state lines, sending emails that go out of state, processing credit card transactions, or traveling to other states for work. It is possible for some workers in a business to be covered based on individual coverage, while others are not. Individually covered employees who don't fall under any exception are subject to the law's minimum wage and overtime protections. So even if your business grosses less than $500,000 per year, if you have an employee who, for example, regularly orders products from out of state to be shipped to your office, that employee is individually covered by the FLSA. Anyone who is employed in domestic service, that is, household work in people's homes, is also considered to be doing covered work. This includes maids, nannies, and healthcare workers. The third type of coverage is called named enterprise coverage. A named enterprise is a business that is covered because it's one of the businesses or occupations the FLSA specifically lists as covered, regardless of its size. These named enterprises are hospitals and other residential care facilities, schools, including preschools, elementary and secondary schools, and colleges and universities, and government agencies. The important part to remember is if your business is covered or some of your employees do covered work, the FLSA's provisions apply. These include paying workers at least the federal minimum wage, paying workers overtime if they work more than 40 hours in a work week, keeping all payroll records required by the law, and abiding by the law's restrictions on work by children. employers fail to recognize that their business is covered by the FLSA, it can lead to minimum wage, overtime, record keeping, and/or child labor violations. Those violations can result in back wage liability, additional damages due to the employees involved, and even financial penalties to the employer. If you have questions about coverage or other wage and hour topics, please visit our website, dol.gov/WHT, or call us at 866-487-9243 for more information. All calls are free and confidential.
All right. So, one of the things I wanted to do before we go on to the next video, I forgot to mention. They talked about domestic services there, and I sort of mentioned it in passing as well. So let's talk a little bit about that. So these individuals are covered. Domestic help, which includes cooks, butlers, caretakers, gardeners, and chauffeurs, also includes a babysitter employed on other than a casual basis. So think if you hire a nanny for the summer to take care of your kids instead of sending them to camp or something like that, if you're working, somebody like that, you may have an individual who's covered by the FLSA. They must earn minimum wage if they work 8 hours or more per work week in one or more homes, or they earn at least $2,600 from an employer in a calendar year. Live-in domestics, though, do not have to be paid overtime. So that's somebody who lives in your home then and provides these services. Direct care workers are also subject to minimum wage and overtime rules if they are employed by a third-party employer. Well, whether they're employed by a third-party employer or if they meet these requirements and are employed by the person who is needing the care as well. So this seems kind of abstract, but I'm going to tell you this provision has derailed. You know, we've got a lot of confirmation hearings going on right now for new heads of different departments in the federal government. One of those is Attorney General of the U.S. I mention this just because this particular provision has derailed former nominees for Attorney General. Twice during the Clinton administration, he nominated individuals who had domestic help, and they did not follow this provision. They did not treat them as employees. They treated them as independent contractors. So as an employee, the employer is going to be responsible for some of those taxes. They didn't pay those taxes. And so it didn't come out until they were in their confirmation hearings, and it derailed their confirmation. This happened twice in a row for two nominees. This was back in the 90s. Well, and that could be, but it's just kind of to illustrate that it seems like, seems kind of removed, but it actually does have an impact. And like I said, there are a lot of individuals who will hire babysitters during the summer. Maybe they've got 3 kids or something, and they're at work, and it's cheaper to just hire somebody to come in and take care of their kids during the summer. Well, that person would probably fall under this category. So they need to be careful and make sure that they follow those guidelines. All right, let's move on. I don't want that one. This next video talks about the minimum wage.
When the Fair Labor Standards Act applies, an employer like Sam generally must pay employees at least the federal minimum wage for every hour that they work. Currently, the federal minimum wage is $7.25 per hour. Keep in mind that state laws may set minimum wages that are higher than the federal minimum wage. If Sam's business is subject to both the federal law and state law, she needs to pay her workers whichever rate is higher so that she's in compliance with both laws. You can check the current minimum wage in your state on our website. For example, if Judy works at Sam's business's location in Colorado, where the minimum wage is $10.20 per hour, She is required by Colorado law to pay her that higher wage. The FLSA doesn't require Sam to pay her employees on an hourly basis. She can pay them on a salary, piece rate, or some other basis, as long as they receive at least the equivalent of the required minimum wage for all of the hours that they work in each work week. Let's say Judy works 40 hours per week and is paid a salary of $440. If you divide $440 by 40 hours, that equals $11 per hour. That means her pay meets the federal minimum wage requirement. Special rules apply to tipped employees, like bartenders and restaurant servers who regularly receive more than $30 a month in tips from customers. For example, if Judy works as a waitress, as her employer, Sam may consider her tips as part of her wages. Taking this credit for tips toward her minimum wage obligation is called taking a tip credit. When an employer takes a tip credit, the FLSA requires them to pay at least $2.13 per hour directly and allows them to take credit for up to $5.12 per hour for tips the worker receives from customers during that week to make up the remainder of the full minimum wage. In any work week when the worker's tips, when combined with the direct payment the employer provides, are not enough to reach at least the minimum wage for each hour worked, the employer must make up the difference. In addition to tips, Sam may also count other forms of compensation towards Judy's wages. These include commissions, some bonuses, or the reasonable cost of housing, food, or other facilities she provides for her benefit. Employers and workers may not make agreements calling for payment of less than the minimum wage, or the FLSA otherwise requires that the employee receive it. The employer and the worker cannot make an agreement to break the law. Employers of workers covered by the FLSA must post a notice explaining the law's requirements, including a minimum wage, in a place where workers can easily read it. We provide these posters free of charge on our website at dol.gov/WHP. Some employers pay more than $7.25 per hour, but still violate the minimum wage requirements when they make deductions from workers' pay that reduce wages below $7.25 per hour. Please watch our video on deductions to learn more. When employers fail to pay employees at least the federal minimum wage, those employers have violated the FLSA. FLSA violations can result in back wage liability, additional damages due to the employees involved, and even financial penalties to the employer. If you have questions about the minimum wage or other wage and hour topics, please visit our website, dol.gov/WHP, or call us at 866.
Okay, so that talked about it talked about the minimum wage, but it also talked about tips a little bit. We are going to be, that's another complication. Is there special rules for certain types of employees, certain types of job duties? So as I had mentioned, if somebody receives regularly at least $30 a month in tip, they're considered to be a tipped employee, and they fall under a different category with regard to how much the employer has to pay them. They still have to get at least $7.25 an hour in total, but that $7.25 an hour is now made up from two different sources. $2.13 from the employer and $5.12 in the form of tips. If they didn't make enough in tips to get to $5, an average of $5.12 an hour that week, the employer has to pay them enough to make up for the difference, so that there's still, those two sources combined equal at least $7.25 an hour. Or if they're entitled to overtime, at least $10.88 per hour. We're going to go into more detail about how to calculate the tip income and talk about that tip credit. So we haven't got there yet, but that was just kind of a little preview of that. All right, last topic, overtime.
As an employer, if staff requires or allows her employees to work overtime, meaning more than 40 hours in a week, it's generally required that she pay them premium pay for those extra hours. Unless specifically exempt, covered workers must be paid requirement applies whether the worker is paid by the hour, on a salary, on a piece rate, a day rate, by the job, or under some other arrangement. Here are some examples. Amanda works for Sam at her fast food franchise, which is covered by the FLSA. She does not qualify for any exemptions from the overtime requirement. She gets paid $10 per hour, and last week she worked 41 hours. So that's 40 hours at $10 per hour, which equals $400, plus 1 hour of overtime at 1.5 times her regular rate. 1 hour of overtime times time times $10 equals $15. Amanda is due $415 for this work week. It is important to remember that simply paying an employee a salary does not necessarily mean that the employee is not entitled to overtime for working more than 40 hours in a week. Paul also works for Sam's fast food franchise in the office as an assistant and gets paid a salary of $400 for a 40-hour week. Last week, he worked 50 hours. Paul's $400 salary, divided by the 40 hours he and his employer understand that it covers, produces an hourly equivalent of $10 per hour. His additional overtime pay for that work week is calculated as follows. 10 hours multiplied by time and a half multiplied by $10 equals $150 in overtime due. Paul is due his salary, $400, plus $150 for his overtime hours, for a total of $550. The FLSA and its overtime requirements apply on a work week basis. An employee's work week is 7 consecutive 24-hour periods, starting on any day and at any time the employer chooses. For example, 12:01 a.m. on Mondays. If an employee works more than 40 hours during the 7-day period, overtime is due. Even if payroll is run every 2 weeks, the number of hours worked must be totaled separately for each 40-hour work week. That means if Amanda worked 45 hours in week 1 and only 20 hours in week 2, she is due 5 hours of overtime for week 1. All hours worked for the same employer are added together each week, even if they occur at different work sites. So, if Amanda works at more than one of Sam's restaurants, she needs to total all of her hours worked in the work week at all locations to determine if overtime is due. Let's say she worked the following schedule this work week: 20 hours in Sam's restaurant A, 15 hours in Sam's restaurant B, and 10 hours in Sam's restaurant C, which totals 45 hours. In this example, Amanda has worked 5 hours of overtime for the work week. These 5 hours must be paid at 1.5 times Amanda's regular hourly rate. To know how much is due in overtime, employers must calculate an employee's regular rate for the work week. An employee's regular rate takes into account all wages for employment. Wages include non-discretionary payments, like production bonuses, and any food, lodging, or other facilities the employer provides for the employee's benefit. Some types of payments to employees do not have to be counted as wages, however, like gifts, holiday premiums, discretionary bonuses, and reimbursements for expenses. Here's an example. Last week, Jason worked for Sam for 50 hours at $10 per hour. He also earned a $50 production bonus for meeting food waste guidelines. To calculate Jason's regular rate, you take 50 hours and multiply it by $10, which equals $500. Then add the production bonus, which is $50. The total straight time earnings due before overtime equals $550. Divide the total straight time earnings by the number of hours Jason worked. $550 divided by 50 hours equals $11 per hour regular rate. Jason's overtime then is due based on a regular rate of $11 per hour, not $10 per hour. The bonus in this case had the effect of lowering his regular paid $1 per hour. It's also important to note that Sam cannot bank employees' overtime hours and pay them out the later work weeks. She also cannot offer her workers comp time and little cash when they work overtime. Only public agencies or other government employers are allowed to offer compensatory time off for overtime hours. Some workers don't have to be paid overtime because of the types of jobs that they hold. The law includes some specific exemptions that define situations where workers don't have to be paid extra when they work more than 40 hours in a work week. For example, an exemption from the overtime requirements of the FLSA applies to most drivers, drivers' helpers, loaders, and mechanics who are employed by a motor carrier and whose duties affect the safety of operation of the vehicles. When employers fail to pay employees overtime they have legally earned, those employers have violated the FLSA. FLSA violations can result in bad wage liability, additional damages due to the employees involved, and even financial penalties to the employer. If you have questions about overtime or other wage and hour topics, please visit our website, DOL.gov/WHT, or call us at 866-4US-WAGE for more information.
All right. So again, talked about a lot of things in there that we haven't covered yet, but that we will be covering. So I alluded to that concept of salaried individuals who are entitled to overtime. If there's a salaried individual, but they meet the requirements to have to pay them overtime for hours over 40 a week, then you have to do a calculation to figure out what that hourly rate is, right? It talked about certain bonuses that would be included in the rate, the calculation of that hourly rate. The reason you'd be calculating that hourly rate is because you've got overtime to calculate. So we're going to be going through all of that stuff and all of those calculations. So we're going to wrap up now for today. I want you to read the chapter, even though, like I said, there may be parts in there that you're struggling to understand. Try and get through. I don't expect you to understand it on your first read through because we haven't lectured yet on it. But we'll be going through a lot of those calculations that you'll probably be like, well, I don't get this right now, but you'll get it by the end of the chapter. All right. Any questions? All right. Wonderful. Have a great weekend.